Hey all, good morning and welcome to ShareTrek. This is Raj here. I'll start off by talking about Apple. Apple refuses to go down. It's like a balloon or a float on water. They keep on pushing it down and it keeps on bouncing back up. As a result, the QQQ ended flat at minus 0.05%. I don't know if we are consolidating at the market bottom or we are waiting for a catalyst. My theory has been that after the midterms, we are likely to pick up. And by that time, a lot of our negatives would get resolved. The Russia-Ukraine crisis, the China zero COVID policy, all those things would get resolved. And also the political uncertainty in the US will potentially be resolved positively. So that is my working thesis at this point of time. So when I look at this consolidation, I'm looking at what are the catalysts at play right now, and what are the ones that we know which are coming up immediately, and then what are the potential catalysts that may come up in the near term. So on Friday, the September jobs report from the Bureau of Labor Statistics will be released. Will this be a positive catalyst? That's a question. What exactly would be a positive catalyst? If jobs are strong, expect Fed to be aggressive. And if you expect Fed to be aggressive, that means you're expecting interest rates to go up, and therefore the stock market will fall, the VIX will go up. So that's one expectation. If the jobs are weak, expect the market to think that the Feds will go easy with the interest rate and our short-term greed is going to push the market up. But really, is that a positive catalyst? Because that would indicate that we are going closer towards recession, because the strong US dollar, it means strong US dollar is importing deflation from outside because the goods are becoming cheaper, and as a result of which imported substitutes are much more preferred by the consumers, and the local manufacturers find it difficult to export because in US dollar terms they'll have to reduce the price so that the other countries which import them can afford it. Therefore, they would find a drop in their sales, and they would be creating a lot of layoff situations and reduction of capacity. So in the sense that even though the stock market might go up, I would say that the economy is definitely going to suffer in the longer run. So that's the mixed bag that we have here. The next catalyst will be that the next United States federal interest rate decision will take place on Wednesday, November 2 at around 6 o'clock GMT. So at that point of time, we would have, somewhere before, during, and after that, we'll have a bit of volatility, and then we'll have a set direction for the next 15 to 20 days. So that's the other catalyst that we know of. Currently, what is happening is that the decision by Saudi Arabia to join Russia to cut oil output is likely to get oil prices to spike and inflation to surge. This will export inflation worldwide and destabilize many governments. And for United States, what it's going to do is it's going to make the US dollar so strong that it will push US into recession, because exports are going to become too expensive, and as a result of which you'll have factory closures and layoffs and stuff like that happening. And it's going to punish Europe a lot. And remember, OPEC is doing this along with Saudi Arabia and Russia. So this is not a benevolent design. In some quarters, it's being perceived that Saudi Arabia is returning the Trump's favor by spiking inflation around midterms to influence the election outcome. This in return for letting them off the hook for the Khashoggi incident. We'll never know the real motivation, but cutting oil production in collaboration with Russia at this point of time does indicate bad intent towards Europe, bad intent towards United States, and bad intent towards most of the economies which are right now struggling due to the strong US dollar. Apart from these three known catalysts, other potential surprise catalysts could come from Russia, China, UK, and Europe. Okay, you already know what they are. I won't talk about that. Enough of the doom and gloom. Let's now go and look at the pre-market action on our TradingView platform. Let's get started with that. Well, here we are in our TradingView platform, and we are looking at the Nasdaq futures chart out here, and it's down 0.49% since yesterday. This is the pre-market action right now. And you can see that this particular resistance that we have here of 11,597 seems to be holding us back for the last 3 days. We have been around that resistance line, either slightly above that or slightly below that, but it's proving to be effective. If we cross this and convert this into a support at 11,597, then our next resistance is going to be 12,168.25, and that, along with the potential stop, I'm going to put one more line out here. There is a potential stop out here, which could be the next resistance, and it can play out at 11,665. So our first resistance is at 11,597. The second resistance is at 11,665. MACD is bullish, momentum is below average and pointed down, so I wouldn't consider Nasdaq to be bullish. Now let's go and look at the indicators. US oil has fallen. I expect the US oil to continue to raise a little bit. Maybe the fall in the oil price could be because of potential action from US to persuade Saudi Arabia and the OPEC to avoid cutting oil production at this stage. There might be some talks in place, but if the OPEC goes ahead with oil production cut, then we should expect oil prices to spurt back up again. We have been at a peak somewhere around 129.15, and right now at 88.5, we are a bit low out here. And looking at the geopolitical configurations at this point of time, what is happening with Russia and Europe, and what is happening with US and Saudi Arabia, I think that there's a potential that there would be a misadventure to cut oil production, and it's going to piss off the whole world. So I hope that doesn't happen. That said, let's go and have a look at QQQ. QQQ is at 280.84, down 0.40% in pre-market action. And friends, as I mentioned before, we are in a long-term bear channel out here, and we continue to have a support at 278.43, which is supporting us for the last couple of days. And we also have support from the 10-day simple moving average, which is this yellow line that you see here, which is at 276.11. So that's going to continue to be a support for us, and our resistance is going to continue to be 286.35. Our MACD has turned bullish at this point of time, but the momentum is below average and flat. And pre-market, we are already down minus 0.40. Minus 0.40 at 7:34 a.m. in the morning in pre-market action is not something that I would take very seriously, but it's definitely not bullish at this point of time. But if the market was to decide to go bullish, it has got plenty of room to run before it encounters the resistance of the bear channel. So any rally is going to be a rally in a bear market. So with that said, let me go on to S&P 500, which is down 0.45% pre-market, and it's flirting with the diagonal line of resistance and the horizontal line of resistance, which is at 376.38. If we break through this today, then our next resistance is going to be 381.55, and I'm afraid to say that that's going to lay the foundation for a bull channel, which I think is very improbable in the given situation with regard to how QQQ looks like, and the overall geopolitical and economical situation that we have. But we never know. We'll see what happens. Let's look at IWM Russell Index, which is down minus 0.45%, and it's already crossed the diagonal line of resistance, and we are above that. So today we are most likely to convert this diagonal line of resistance into a diagonal line of support. So I'm going to already mark it as a support, and I'm going to hope that we stay above that. Then we can potentially build a bull channel back again. MACD is bullish, and momentum is just below average but pointed downwards, so anything can happen. It could go either way. So I'll leave it with a positive note by converting this diagonal line of resistance for the bear channel into a diagonal line of support for a potential new bull or bear channel that may happen. Dow Jones Industrial Average is down minus 0.41% pre-market, and it's flirting with this resistance at 301.49. Right now we are at 301.54, so I'm not going to make any changes out here. I'll wait for the market to open and see what happens out here. But if it were to fall, it will get support from this diagonal line of support from the previous bear channel, and that can be the diagonal line of support for a new bear channel. And then if we go up, then we have a resistance at 310.69, which is going to come into play. So that's what I'm looking at out there. And MACD is bullish, which is a positive factor, but momentum is below average and flat at this point of time, which is not a conducive factor. And if I look at the VIX, VIX is up 2.03% pre-market, and it's still within yesterday's range. And we still have a diagonal line of support for a earlier bull channel for the VIX. Our MACD is bearish and momentum is above average, and it's pointed upwards. So there's a good chance that the momentum will take the VIX up further today, and the oil production cut issue will definitely have a bearing on the VIX, and we'll see how it progresses when the market opens. And if I look at the US dollar index, the US dollar index is getting stronger. It's up 0.14%. So it's firmly within this diagonal line of support that we have out here. In fact, I'm going to refine this a little bit more by pulling it a little down. It still has multiple touch points, and our resistance is going to be the 10-day simple moving average, which is this yellow line that you see here, the yellow curly line, and that's sitting at 13,403.06. MACD is bearish and momentum is above average and pointed upwards. So there is going to be strength in US dollar index, which is not good for the stock market. It's not good for the US economy either, but it's good for the inflation. With that said, let's go and look at the market movers. I'm going to look at Microsoft out here, and Microsoft is down 0.51% pre-market. So it's indicating that it's not going to support the index today. Apple is down 0.31% pre-market. Amazon is down 0.37% pre-market, and Google is down 0.60% pre-market. And if I look at Microsoft, we still have a gap which is to be covered. So there is a potential for Microsoft to come down today. MACD is bullish, but momentum is just at average and it is flat. It's sitting somewhere around 50% and 49%. So that's not a great positive, but it can always pick up. And if you look at Apple, Apple also has got a little bit of a gap to be filled up here, or I would say that the gap is already taken care of. Yeah. So Apple doesn't have any constraints, but friends, for us, Apple has to drop down to bring the index down and have a seller capitulation so that we can form a bottom and then consolidate and move upwards. So as long as Apple doesn't come down, it has already been down to 129. Right now it's at 146. So let us hope that we see some movement in Apple that can help us to consolidate. Amazon still has got a gap to be filled up, and it has got support from the 10-day simple moving average at 116.44. This yellow line is the 10-day simple moving average, and it has got resistance at 122.46, which has been consistently preventing us from going up. Further, it also has resistance from the 100-day simple moving average, which is this fluorescent blue line, and that's sitting at 121.44. Right now, pre-market, we are at 120.55, which is down 0.33% from the previous close. MACD is slightly bullish, but momentum is below average and flat. And if you look at Google, Google has got support from the 10-day simple moving average sitting at 99.56, and it has got a resistance out here, which is at 105.06. So Google could definitely pick up later on today, provided the momentum, which is below average and pointed down, tries to turn around. But I don't see that happening for Google at this point of time. So overall, I would say that it's a mixed bag. Potentially, it's a down day given how the oil cut news continues to play out in the market. And if I look at the commodities, wheat is down 0.22%, and copper is down 0.95%, still consolidating. And if I look at the genomics, I'm going to just sort this out to have the biggest winners on the top. Illumina has done very well, and reasonably so, because they have revenue streams. All they have to do is just take their eyes off Grail and start working on their own in-house solutions. They will be better off with the release of the 6000DX. They are doing incredibly well, and there's a well-deserved gain out there. But today, pre-market, they are down 0.39%. And I would say that they have a potential to go all the way up to 230.07, which is where they'll encounter their first resistance. And I think that's what they'll be aiming for, because both their MACD and the momentum is looking very promising. Bluebird is up 2.8% as of yesterday's close, but today it's down 1.29% pre-market. There is a little bit of news on Bluebird, and I'm going to have a video out to you shortly about that later on today. And we have SQZ Biotech, which is up 2.0% as of yesterday, but no trades pre-market today, and it still continues to have resistance at 3.02. I'm going to convert this into a red line to denote that it's a resistance. And we have a Verve, which is up 1.20% as of yesterday, no trades pre-market, and it's going to find a resistance out here in this diagonal line of support from the previous bull channel. I'm going to mark that red to show that it's a resistance, and our MACD is bearish and momentum is just above average, and it's picking up, so I have hope for Verve to go up further. PSEB was up 0.61% as of yesterday, but no trades pre-market. It has resistance at 7.06. MACD is positive. Momentum is also above average, so there's nothing stopping PSEB from continuing to be positive. IMTX was up 0.39% yesterday. No trades pre-market. MACD is positive and momentum is just at average, so it's a bit iffy for IMTX. Intelia was up 0.07% yesterday. No trades pre-market, and it's tackling a resistance at 60.88, and right now it's looking as a support because we are at 60.92 from yesterday. So I'll watch this closely and change this into a red line tomorrow if we go below this, and it'll stay green if we go above that. We still have a strong resistance coming from the 50-day simple moving average, which is a thick orange line that you see out here, and it's sitting at 61.42. We need to cross that in order to make any progress for Intelia. IDNA is down 0.47% as of yesterday, no trades pre-market. Beam is down 1.26 as of yesterday, 1.26% as of yesterday, no trades pre-market, and we still continue to have resistance from 53.43. And our MACD is bullish, but momentum is below average. And CRISPR Therapeutics is down 1.01% pre-market. It continues to have strong resistance from 66.36, and also from the 200-day simple moving average, which is this thick white line, which is sitting at 65.40. Pre-market, we're at 63.98. And our MACD is slightly bullish, but momentum is still below average, so I don't hold much hope out there. RG is down 1.80%, 1.88% from yesterday, and there are no trades pre-market. Allogene is down 2% yesterday, no trades pre-market, and we still have a strong resistance from 11.98, and the 200-day simple moving average, which is this thick white line, which is sitting at 11.19, and also the 10-day simple moving average, which is sitting at 10.86, which is this yellow line. So right now we are at 10.78. Caribou Biosciences was down 2.83% yesterday, no trades pre-market. Veritas was down 3.24% yesterday, and no trades pre-market. Teladoc is down 0.70% today pre-market after falling 3.46% yesterday. And we have a minor line of resistance at 27.02, and we have fallen below that. So I'm going to mark this minor line of resistance as a line of support, and we'll see what happens today in the market. Let's look at Invitae. Invitae is up 0.36% in pre-market action after being down minus 3.50% yesterday. We still have support from 2.56, and we still have resistance from 4.04, with the additional resistance from the 100-day simple moving average sitting at 3.03, which is this fluorescent blue line, and also from the orange line, which is the 100-day simple moving average, which is sitting at 50-day simple moving average, which is sitting at 3.15. Pre-market, we are up 0.36% and sitting at 2.77. So those are all the resistance that we had to break through today. MACD is slightly bullish, but momentum is below average. DNA had fallen minus 5.97% yesterday, and today pre-market it has fallen another 1.81%. So it can fall further, but it has got support from all the simple moving averages and also support at 2.68. Our MACD is bullish, but momentum is above average and sharply pointed down. So I expect DNA to improve today. If any stock gains, it's most likely to gain because it lost the most yesterday, and it is also looking a bit strong in the indicators. So there's a chance for it to recover today. With that said, my friends, That brings me to an end of this session today. My friends, please keep your motivation up and do not take any hasty actions in this market. Overall, geopolitical situations are horrible, and overall, the oil price cut action, which is being proposed by Saudi Arabia and OPEC, is also not in the right direction, and it does no logic would allow that kind of a thing to happen at this point of time. But if they continue and go ahead with that, it's going to be terrible for the global inflation situation. It's going to exacerbate the political situation in many countries and cause a lot of political instability. So we hope that better senses prevail. But regardless of all of these things, please remember that the markets which go down have always come back up. Throughout the history of the stock market, we have always continued marching upward. It's never on a straight line, but with ups and downs. Right now we are on the down phase. Soon we'll come back to the up phase. So hold on and do not make any hasty decisions, and do not put money into this market which you can't allow to stay there for at least another year or two. So with that in mind, please proceed with caution. My friends, it's good times ahead, maybe 6 months down the line or 3 months down the line, or maybe the Santa Claus rally, which is my wishful thinking with a little bit of logic thrown into it. If that happens, then we'll be laughing during Christmas. So looking forward to that. And if you like this video, please press a like out there. It helps the channel. And if you're not yet subscribed, please subscribe and help grow this channel. Thanks and have a great day. Bye for now.